Happy New Year. And a special Diwali gets extra special when you have Ramesh Damani on the show to talk about markets, his fitness mantra, how can you keep fitness off your portfolio, and what is that next big idea Ramesh Damani has identified for our viewers. Mr. Damani, always a pleasure to have you on ET Now on behalf of everyone, our team, your fans, millions of our viewers, and for those who look up to for advice, a happy Diwali.
Thank you, Nicole. Thank you for your very kind wishes. And please allow me to reciprocate that for your staff and your viewers and your anchors today. I hope you all have a very healthy and a very prosperous Samvat 2081.
You know, you can make it very special by just three things. And those three things are, do you want to guess or should I just prompt you?
Prompt me, Nicole.
Backer stock ideas from Ramesh Damani, everyone's Diwali extra special.
I knew that would be number one and I was reticent. Because let me just tell you, my best idea is you remain invested in India. I think that has been the mantra for the last 35 years since I've been in the market. You look at the last 25 years, it's been bookended by the Y2K crisis and the pandemic crisis. And despite all that, the market has gone up, I think, from 5,000 to 80,000 plus the Sensex. So the markets are fairly resilient. Bad news happens, market discounts them, good companies work on overtime to do them. So having said that, does the market look a bit tired this last quarter? I think it looks a bit tired. Does it mean that it's just a pause that refreshes? Yes, I believe it's just a pause that refreshes. I think soon the market will go through a time of price correction and then move inevitably higher. So I remain extraordinarily bullish on the prospects of the market, on the prospects of this country. And I think this recent bout of volatility should not discourage you from your long-term investment goals.
Ramesh, hi. Always good to have you on Muhurat Day and otherwise as well. And you know, that's exactly what I wanted to talk about, because every bull market will come with its bouts of correction, will test your patience as well. What's the message to the investors right now who are waiting with their shopping list, who were waiting for a dip, but now don't have the courage to buy?
You know, I think it's a big mistake. The last 30 years, 40 years since I've been in the market, as you well remember, Aisha, I started the market when the Sensex was below 800. Today it's over 80,000. So it's been an extraordinary 100x for the index itself, forget individual stocks. So it's generally, as Warren Buffett has said, expressed sometimes that about America, he said it's a wrong or a mistake to sell America short. I think the same thing is probably true for India, at least for the last 40 years. And I have full reason and fervor to believe that'll be true for the next 10, 20 years too, that India is a good time. And you should distinguish between risk, which is the permanent loss of capital, and volatility, which is what we're experiencing now. I think we will experience volatility. We can't avoid that. That is the nature of the beast. But I think if you're not investing in India or not remaining a long-term investor, there's a greater risk to your portfolio by not doing that rather than by trying to time the market.
But Ramesh, do you think the structure of the rebound is going to be a little bit different? You need to bet on different horses, or is it just buy more of the same that held up till the market all-time peak?
Well, it's an interesting question. I think typically as the market moves from the early phases to this more mature phase, it becomes more of a stock pickers market. But typically, in my experience, the leaders of the bull market continue to be the leaders over the long period of time. Having said that, I personally have reallocated my portfolio a little bit here and there. So I'm not sure. I'm a bit confused about that point myself. But I have underlying faith that the good businesses will continue to deliver for shareholders. And, maybe just lighten up on some shares and bought some more other shares. Nothing more serious than that.
Ramesh, hi, evening. And, we've also seen a lot of excitement in the primary markets, and one can't deny the kind of fervor that we've witnessed there. There have been some stellar listings as well that have taken place in the Samvat gone by. But would you believe that it's a little bit overheated there, that sometimes valuations there even aren't justified? Are you cautioning investors or think that they should join the party?
Typically, in my experience, that unless you're a really early stage investor in the primary market, you don't tend to get a good deal. You tend to get overpriced shares. Promoters who are selling, merchant bankers who are selling, know how to price these things depending on the demand that they see. So there are probably better pickings in the secondary market, the primary market. And one of the explanations for the market being soft is the amount of money being sucked out by the primary market by these very high issues, starting from Hyundai, say, for example. So my suggestion to investors is, unless they have some insight into a listing in the primary market, is to stick to the secondary market.
Ramesh, you've been a big votary of PSUs, something which has worked a charm so far. But of late, there seems to be a mid-air turbulence. Is it a good time to buy on the first leg of the PSU rally? Those who always wanted to buy, are they getting a great entry point? Or PSUs now, in terms of a level and in terms of market cap, has peaked out for a long period of time? What are your thoughts there?
It's a very difficult question, Nikunj. But my feeling is, the first point I said to you is that the leadership of the bull market stays for the duration of the bull market. Having said that, have I lightened up on some public sectors and bought some other? Yes, I have actually done that. It's just you want to take sometimes some money off the table. So I want to take some money off the table. Having said that, the PSU basket is, a plethora of choices. You get from commodity companies to defense to railways to technology companies. So you've taken out some of the money, but put it in some other of the PSUs. So I would remain broadly invested in the PSU theme. I may not particularly be invested in some of the shares that have been great winners for me so far. The only point I try to mention is that when people talk about the PSU rally being over, I mean, from the lows, which they started 4 years ago, they're up 20x, 25x. And after that, if they correct a little bit, so be it. It's fine. I think people who are lamenting that, oh, we told you the PSU is correct, probably didn't buy at the early get-go. If you bought a basket of PSUs maybe 4 years ago, you're still 10 to 20x ahead of the game. So I think they have given us fabulous returns. And I remain confident that they will do well as a basket overall.
I'll move to where we are moving in terms of the next big thing. I mean, Ramesh Damani has championed the art of really identifying not where the puck has moved. The puck for PSUs has already moved. He believes in identifying where the puck will move. So this Diwali, Mr. Damani, where do you think for investors the puck is likely to move? If we are discussing PSU, that's where wealth creation has happened. And since you really like to identify these, small trends within trends, where do you think the puck is likely to move in terms of theme, ideas, sectors, or wealth creation?
Thank you, Nikunj. That's a great analogy from Wayne Gretzky, whose father always taught about hockey great in ice hockey, who said, go where the puck you think is going to be, not where you think the puck is. And that's a good way to look at investment. I think the two new themes that we are identifying and telling our friends and well-wishers to look at, one thing that I've been extraordinarily bullish upon, Nikunj, is this, what we call digital public infrastructure theme. India has become a digital country. We've almost leapfrogged a generation of bad, poor infrastructure by building a world-class digital infrastructure. So a lot of now companies are now participating in this, whether it's tax identification services, PAN services, ONDC services, many of those pieces. Then there are maybe half a dozen companies that benefit from this infrastructure play out. So I would first suggest that investors look at this not necessarily from a 6 months or 1 year or 2 year horizon, but from a 5-10 year horizon. It's a long-term story, and the market caps don't reflect the opportunity that we see in digital public infrastructure. The second thing is even surprising me, Nikunj. I've never been a big believer in pharma, but if you go through the headline, go away from the headline companies of DVs and Reddy's, which everyone knows about, and they are very good companies, very well-managed companies. But the second-tier companies, for the first time in India, a lot of these entrepreneurs are doing intellectual property work in India. They're developing vaccines for dengue, new antibiotic materials for obesity with liraglutide and semaglutide. So we're finding a lot of rich pickings in that basket. They're generally in the mid-cap to small-cap range, and we're finding good opportunity there. So if you're looking at new investor, looking for new themes, I would suggest you put some money into digital public infrastructure and some pharma companies which have some intellectual property.
To make my next question slightly elaborate, and I just want to set the tone for the benefit of our viewers here. Ramesh Damani was able to identify the market top in 2007 and 2008. He did a similar thing when the TMT bull run was on, which means that as a smart investor, Ramesh is able to identify pockets of excess. And how are we going to judge that? Well, through his commitment levels. So Ramesh, I'm setting the tone for the benefit of our viewers. If you can just elaborate and explain that according to you, where are we in this bull market cycle? Are we anywhere close to bubble? And what about your commitment levels? Because these are two things which in a sense will tell us that how are you feeling about the market in terms of how much more it can go.
Nikunj, you're a skilled interviewer. You know how to undress a guy, which is what you're doing to me today. But fair enough, I'll take the question up. There is some evidence that there was some froth in the market. And how did I feel that? Because the market didn't respond to good news. It sold off on good news. It crashed on bad news. You've seen that across the results spectrum that has come in the last quarter. The market has responded well. A lot of money has been diverted from the primary market into the secondary market. All these are signs that the market seems tired. But I will also suggest to you that while it does seem tired to me, a lot of stocks, even as we speak, are making new highs. A few weeks ago, Trent made a new high after having a huge run up. So the market doesn't seem to have given up. It just seems to be more tired than given up on the bull market scenario. So I would expect it to cool off for a period of maybe a few months, 2 months, 3 months, and then the economy to resume its uptrend in the next few months. In terms of personal commitment levels, there is, to be perfectly honest and candid with you, I have more cash than I've had in the last 4 or 5 years, only because I booked some profits, like I told you, taken some money off the table. But I'm not happy having money off the table. I'm quite keen to invest that back in the market. I just need to identify, work, and find the companies that I want to invest in. So having said that, yes, I am on a little bit more cash than I normally am.
Interesting. So Ramesh, can't let you go before just one Diwali stock idea for our viewers.
I wish I could share that with you. SEBI has, I love sharing stock ideas, Aisha. That's my job. But unfortunately, SEBI has made it extremely difficult to, unless you register to talk about stock ideas. So I'll pass on that question. But if you look at the pharma space, for example, among people that are developing, antibiotics, dengue vaccines, breast cancer drugs, or liraglutide, it's going to be a huge, huge thing for obesity treatment. I think you'll find some good pickings there.
Okay, Ramesh, we'll read between the lines and we'll pick our stocks accordingly. But great to have you on the show and wish you and your entire family, especially the grandkids, a very happy Diwali from all of us. I'm sure you've got lots of crackers to burst already.
Absolutely. Thank you, Veer and Anna. They are my grandchildren. So lovely to have to greet them. Thank you, Aisha, so much. And you guys have a great Diwali yourselves.
Thank you so much. Okay, that's none other than Ramesh Damani with all the wisdom, and who better than him to kickstart our Diwali programming. But you know what? Diwali is not complete without a mention of what's really happening with the exchange.
If you like this video, then like, share and subscribe to ET Now.